What if I told you Silicon Valley's biggest success stories weren't chosen for their genius, but for their psychopathic traits? It's not a bug, it's a feature of the system. The venture capital world has perfected a selection process that filters for people with a grandiose sense of self-worth, a lack of empathy, and a talent for pathological lying. Think about it. The entire fake it till you make it culture is just a business-friendly term for being a convincing liar. This system gave us the messianic visions of Elizabeth Holmes at Theranos and the toxic asshole culture of Travis Kalanick's Uber. But it's not just a few bad apples. The entire orchard is designed to cultivate them. The aha moment isn't that some tech founders are jerks. It's that the whole system is a psychopath factory, mistaking personality disorders for leadership potential.
There's a place where insider trading is completely legal, and it's where every tech unicorn is born. Welcome to Silicon Valley's private market. Before a company like Facebook or Uber ever goes public, its shares are traded for years in a secret, unregulated stock market. Here, employees, founders, and venture capitalists can buy and sell stock based on confidential information that would land you in prison if you did it with a public company. They know the real user numbers, the secret product roadmaps, and the actual financials. This isn't a level playing field. It's a private club where the members get to bet on a race they already know the outcome of. The aha moment isn't that Silicon Valley is corrupt. It's that the system is designed to make insider trading the core business model, ensuring the rich get richer long before you ever get a chance to invest.
That billion-dollar startup you just read about, its valuation is probably fake, and it's part of a massive, coordinated scam to create the illusion of success. The unicorn valuation is one of Silicon Valley's greatest marketing tricks. Here's how it works. A venture capital firm invests in a startup, then convinces another VC firm to invest at a much higher price, instantly creating a new, inflated valuation on paper. It's a circular game of make-believe, propping up hundreds of zombie unicorns that are burning cash and have no real path to profitability. More than 1,000 companies hit this status in 2021, but almost none have successfully gone public. The aha moment isn't that startups fail, it's that the billion-dollar valuations you see are a carefully constructed fantasy designed to lure in bigger fools with bigger money.
Apple has spent over $500 billion not on innovation, but on a legal trick to manipulate its own stock price. It's called a stock buyback, and it's Wall Street's favorite scam. Instead of using their record profits to invent new products, raise wages, or lower prices, big tech companies like Apple, Google, and Meta spend billions buying back their own shares. This reduces the number of shares on the market, which automatically makes their earnings per share look better and drives up the stock price. It's a sugar high for investors in a massive payday for executives, whose bonuses are tied to that exact metric. The aha moment isn't that companies are greedy. It's that they found a perfectly legal way to use their own money to manipulate their stock, creating fake growth while producing nothing of real value.
A tech IPO isn't a company's graduation day. It's a carefully orchestrated heist, and you're the mark. When a hot startup goes public, Wall Street banks deliberately underprice the shares. They then allocate these cheap shares to their biggest clients, hedge funds and billionaires, as a reward for their loyalty. On the first day of trading, the stock pops, giving these insiders an instant risk-free payday. Meanwhile, regular investors, hyped up by the media, are forced to buy in at the inflated peak price. The company itself leaves billions on the table. The aha moment isn't that IPOs are risky. It's that the entire process is a wealth transfer scheme designed by Wall Street to let the rich get first dibs while everyone else is left holding the bag.